Good morning, everyone. Welcome back to another episode of From the Ground Up, real-time issues and real-time solutions for MWBEs and small businesses, brought to you by Queen Strategy Partners. Nicole Valentine, Esquire, Danielle Douglas, and myself, Dr. Stacey N.C. Grant, three MWBEs who knew the brilliance in collaboration and coming together to provide these resources to all of you. So we want to thank you for tuning in. Season 2 is here. It is the beginning of March. And remember, our new show schedule is the first and third Tuesday of every month at 9 a.m. Eastern Standard Time. So thank you for tuning in and being a part of the show. We know that today's show is going to be of utmost importance. So before we get started, before I introduce my dynamic co-host, I want you to invite somebody to this broadcast today. They do not want to miss what we're talking about, especially in light of everything that we're seeing happening in the financial recovery that we're all praying for each and every business. We don't want anyone left behind. So pause right now. Go ahead and share the broadcast and let folks know that we're here from the ground up with one more episode talking about the new PPP loan. And guess what? If you didn't know, it's open for sole proprietors and independent contractors, but time is running out. So make sure that you let folks know that we're about to have one of the leading experts share some real insight on what's next for you. But with that, I will turn it over to my beautiful, dynamic, and amazing co-host, the one and only Danielle Douglas.
So good morning, everyone. And thank you, Miss Dr. Stacey N.C. Grant. As always, we are so excited about this show. We think and we can guarantee that you are going to get a wealth of information. And that is going to translate to wealth in your pockets and for your business. So stay tuned. You got to stay with us. We're only asking for an hour, but we are going to give you great, again, information in this hour. And so without further ado, I would like to introduce our special guest. Kapalatu Tiamayu is a loan officer at National Development Council. And as a loan officer, her role is that of a lender and a credit analyst rolled into one. She focuses on financing small businesses. That is a key word. Hashtag financing small businesses in New York and Delaware using SBA loan products and other non-conventional lending programs. Her clients are generally growing businesses seeking to complete an explanation renovation project, purchase equipment, leasehold improvements, working capital, refinance poorly structured or high interest debt, and purchase inventory. And she also partners with community developers to help provide a quick decision, expertise on SBA lending, and a common sense approach to underwriting. Folks, Kathy is the person you want to speak to because she's the deal maker that weighs in on if you get that loan or not. Now, about the organization that she works with, the National Development Council work focuses on homes, jobs, and community. It was founded as a national nonprofit in 1969, and NDC has worked for almost 50 years fulfilling its mission to increase the flow of capital for investment in low-income communities. NDC directs its capitals to support the development and preservation of affordable housing, the creation of jobs through training and small business lending, and the advancement of livable communities through investments in social infrastructure. The Grow America Fund is a national small business lending program working with individual community partners to provide financing to growing small businesses throughout the country. And NDC operates as a community development lender to support the creation of jobs and the expansion of eligible small businesses in underserved communities, particularly minority and women-owned businesses. In many cases, Grow America Fund's loans are partially guaranteed by the U.S. Small Business Administration, includes multiple participations, and provide flexible amortization and long long-term payouts. So that was a mouthful, but it told us the expertise of our guest today. So without further ado, thank you, Kathy, for joining us and our guests this morning. We're happy to
Thank,
have you.
thank you, Danielle. Thank you, Dr. Stacy. It's a pleasure to be here with you this morning.
Yes, we are excited because, honey, it is Women's History Month. It is the Heels of Black Girl Magic, and we have the expertise of your presence today to get into this conversation. So, what's new with the PPP? Give us, as we would say, spill the tea. Let us know everything that is new about this loan since we last talked about this in our first season when the PP loan was given out. So, what's changed? What's new?
So a lot has changed with PPP recently. I think a lot of different business owners weren't able to get PPP initially, or they were just getting a small amount of money based on how the calculation worked. So because of the new administration, the SBA recently updated what that calculation would look like. So previously, lenders would use line 31 of the tax return, which is the net income after all the expenses have been deducted from a sole proprietor or Schedule C business. And what the SBA found was this was increasingly shutting out a lot of smaller businesses, particularly minority owned business owners who were writing off expenses as a way of a tax benefit. They weren't able to utilize PPP to the best advantage. So that has now changed. The calculation has now changed to using gross income. So the number before business owners write off their expenses. And because of that, more business owners are able to then receive a higher PPP loan amount. Another thing that's changed recently with the PPP loan is no longer are people with criminal histories that are not related to fraud eliminated from the pool. Previously, if you had like student loan deferment, if you had a criminal history, or a lot, kind of like if you're defaulting on student loans, you wouldn't be eligible for PPP. The SBA has since gotten away with that with this new update that came out last week. And if as long as your criminal history has nothing to do with fraud or lying on an application and things of that sort, you are eligible for PPP. So those are two new, I think, new updates to the PPP program. That's definitely more helpful to communities of color, as well as communities who have been historically disenfranchised in ways that prevents them from accessing loan programs like PPP.
That's
So,
amazing.
so I want to just build on what you just said, Kathy, and that is before I know you took your average monthly income and then you multiplied it by 2.5 or 3.5.
Mm-hmm.
So, as a business owner, if they wanted to do their own calculation and they wanted to, I'll just use 36,000 because we could divide that by 12 easily. If
Mm-hmm.
they wanted to do that and their gross was $36,000 for the year, and that's $3,000 for the month, right? Do
Yes.
they typically will do that 3,000 times 2.5? Is that still the same? That multiplication, that multiplier? And that's
Yes, it
how
is.
they can determine on their own how much money they could potentially expect to get if they are eligible for the PPP loan.
Correct. Yeah. So most business owners, if you're a Schedule C, you want to divide that line 7, the gross income, by 12. 36,000 divided by 12 is 3,000. And then if you're not a restaurant, then you can do the 2.5. So 3 times 2.5, which is $7,000, you would be eligible for PPP. If you are a restaurant, then you are able to get more money because the multiplier is now 3.5 instead of 2.5. So anyone in the restaurant industry, if your NAICS code starts with 72, then you're automatically eligible for that 3.5 multiplier, which is increasingly helpful for restaurants and other small businesses.
Okay. And Stacey, I'm sorry, I'm going to ask one more question in regard to this. And that is that before, the PPP is called the Payroll Protection
Correct.
Program. And so now that it's for sole proprietors and independent contractors as well, how does the payroll piece work? Do they still have to document that they are taking payroll, or is just what does that look like in
Yeah, I
regards to?
was.
Mhm.
Yeah, I would say for a small business who has employees. So if you're Schedule C but you have employees and you still pay payroll tax for those employees, you can get more money with PPP because you're filing 940s, you're filing 941s. So if you do have employees, you have to submit those documents as well so that your lender can factor in that payroll calculation. However, if you don't have employees and it's just you as a sole proprietor, then your Schedule C, your tax return is sufficient to move forward with the loan. If you have a 1099, that's always helpful to link how you generate income, like where is that money coming
Mhm.
from. So 1099 is always helpful. Another requirement from the SBA is proof that you were in business by February 15th, 2020, because a lot of the SBA wants to help businesses that were affected by COVID that had to shut down because of the COVID pandemic that started around this time last year. So I would say February bank statements tend to work, or invoices, or book of records showing that you were active and in business as of February 2020.
Mm-hmm. Absolutely. Hey, Diana, thank you for tuning in. She's saying great information. So let's recap. Like, I feel like this is one that we got to push a pin every time because y'all added some more questions. I don't want anybody to miss it. So, boys and girls, let's recap them. So, first things first, PPP now is eligible, or people are eligible, even if they had challenges with student loans, as
Correct.
long as they didn't have any fraud. They're still eligible, even if they had some challenge with our criminal justice system, as long as it was not fraud. Like, once again, fraud is the key word, right? You have to make
Correct.
sure you're clear of that, but you still have eligibility now under this new PPP. And we also know that because of the change, independent contractors and sole proprietors are now eligible to go after the loan, because prior to this, you had to have employees, to Danielle's point, and, show your payroll. So this is a major change, just in that, before we get into the follow-up questions that Danielle offered. So let me pause because Diana has a question. If you've already been approved for the second round of PPP prior to the changes, can that loan be readjusted? Great question.
So for now, it cannot. If you have an SBA loan number already and it's been approved, there is no takebacks. So it's kind of ongoing for newer loans. The SBA hasn't provided any guidance on previously approved loans, but from what I know, there's no adjustment period for previously approved loans.
Okay, so I know
Unlike
that might have been the answer you wanted, Diana. I know. Yeah, unfortunately, there's no adjusting. So it's good news for those who are waiting and hoping that something would happen, but also the calculations. Danielle, I think that was great that you showed each business owner how they could potentially calculate what they're eligible for with the 2.5 if they're a non-restaurant, and 3.5 if they're a restaurant, now on the gross and not the net. So that is a important part of the process. So Diana, you are welcome. And I think she is tagging a couple other people to join in. This is important information, so you want to make sure that you're aware of what's happening and how we move forward now, because isn't there a deadline?
There certainly is. So the deadline for PPP is March 31st. March 31st is the last day for applications for PPP. And it's not just in like lender specific, it's across the board. That's when the SBA told us as lenders to stop accepting PPP loan applications. So a lot of small businesses, they have 29 days to make sure that they're not waiting for the last minute to put in their applications. Because if you're not able to be processed by March 31st, then there's likelihood that you won't be able to get PPP loan.
And does this have anything to do with the EDIO versus the PPP if someone got the EDIO?
Yeah, so EIDL was it's a separate program with
Mhm.
SBA, and I think you can get EIDL and PPP at the same time. EIDL in December they stopped. I know a lot of small businesses who applied weren't able to get funding because funding was temporarily paused. I think with this new administration and the new stimulus package that they're passing, I think there's some stipulations in there for EIDL. So EIDL may reopen at a later date. I'm not sure, but there is definitely funding coming for small businesses, and it may be in the form of EIDL or other grant programs that the federal government will start offering. Once the stimulus package passes, I think we'll have more details about what that would look like.
So that's good to know because some people might have gotten EDIL but didn't get the PPP. So this
Mhm.
doesn't, it's not either or. It's both
No,
and.
I would say for all businesses, there's tons. If you need the money in terms of your ability to recover from the pandemic, apply to everything. Wait for them to say no first. It doesn't hurt to apply. It doesn't cost money to apply. So it's better to kind of put all of your eggs in different baskets and see which one matches.
So, Kathy, I have a question to build upon what Stacy just asked you, because before, you had to really be, as you developed your capital strategy, you had to be very intentional about how you use both buckets, right? Because you had payroll, and then you could use, the EID. You could use that for payroll, but you could use it for other purposes as well. But you can't commingle, right? And use them both for the. So in this situation, I have a twofold question.
Mhm.
How would you, if you had a business owner who wanted to pursue both at this time, how would you suggest, especially for independent contractors and sole proprietors, that they in their head think about how they could utilize EIDL and how they could utilize PPP? And the reason why this is critically important is because there is a forgiveness of the PPP, but you have to document how you are using it. So, can you offer suggestions for the business owner who may be just in general, but particularly an independent contractor and a sole proprietor that doesn't really have payroll, but they need to still show that they're using, loans in a certain way?
Yeah, I think one thing to realize with PPP is that it is a loan at the end of the day. It is a forgivable loan, but it is a loan. So that means you have to follow the SBA's rules and regulations when it comes to forgiveness, and that means spending 60% on payroll, at least 60% on payroll, and 40% can be used for other things like interest, rent, and other things related to operating your business. So I think for small businesses, it's important to keep separate the different buckets. So if you have 20,000 for PPP and 40,000 for EIDL, you want to properly document how you spent the 20,000 PPP to make sure you have the highest chance of getting it forgiven. EIDL doesn't have that stipulation. It is a loan. It's an outright loan. It's not forgivable. It has an interest rate to it, and a term of 30 years. So you can use that for, let's say, for equipment to trans to, let's say, segue your business into a new revenue stream to deal with the impacts of COVID. EIDL is a better use for that, whereas PPP is strictly a paycheck protection program. It's to prevent people who would be laid off otherwise or would have to file unemployment without it. It's to help them in the meantime with some money to help them either operate their business or continue to pay themselves from their business if they don't have any employees. So you want to make sure you're using at least 60% for payroll and 40% can be used for other business related activities.
And I have one more question, then I'm going to pivot back to Stacy. And that is, if you are a sole proprietor and an independent contractor and you've been getting unemployment insurance because that was opening it up to independent contractors and sole proprietors, how would you, knowing what that's why I wanted folks to be able to do the calculation so they could be very intentional about making that decision if they're currently getting unemployment or they are looking to get unemployment, what would work best for them. So what is your suggestion as it pertains to that? If we put unemployment in the equation for independent contractor or sole proprietor.
I think independent contract, I think they're eligible for both. If I'm
At the
not
same
mistaken.
time?
If I'm not mistaken, I believe so.
Wow.
I think in terms of their accountant, they may have to talk to their accountant on what that looks like. Ideally, because it's technically they are eligible for both. There's no stipulation that says you cannot apply for unemployment if you applied for PPP. As independent contractors. That may change, I'm not sure. But for right now, there's no stipulation against that. Ideally, if you have PPP and you have enough money in payroll to continue to operate your business as a result of PPP, you may not need unemployment insurance. And some business owners may. So I think it's on an individual basis, in terms of what the need is and what each household is looking to do.
That's interesting. So, as we've talked about on the show, the importance of having a good team of experts around you, your accountant, your bookkeeper, your attorney, your loan officer, like these are all important. So, I'm only one employee. Hey, Sherry.
You said
She's
she's
trying
not
to
playing
figure it
around
out.
with this, huh?
Yeah, she said 60% payroll, 40% other. And so she's learning a lot. All right, Sherry, thank you for letting us know that this is helpful for you. And definitely, you all share that we are live while we're still here with an expert who understands, and you do this every single day. We know that you haven't had much rest and you're counting down.
I haven't. It's been a pleasure to serve so many small businesses, but at the same time, I'm looking forward to the light at the end of the tunnel and hopefully get some sun or something.
This sounds like you've been in the dungeon, Kathy. Just like
I have.
hey.
My office literally, I'm in these four walls almost 7 days a week, even on weekends. So it's
Wow.
just trying to make sure we can serve as many small businesses as we can before March 31st deadline. And we went through the same thing during the first round, and just making sure that a lot of small businesses who didn't have access the first time understand that what they need to do to get funding the second time. Because I feel like there's no excuses not to apply for PPP. Even if you don't think you would qualify, it's better to get that you don't qualify because of this, rather than just saying, I don't think I'm going to qualify and not apply at all.
And the other thing, I'm sorry, Stacey,
No,
I'm
it's
going
okay.
to take it over to you. The other thing that we want business owners to understand, and please correct me if I am wrong, but when we talk about access to capital, we talk about the fact that oftentimes we don't have good credit. This loan is not based on your credit, it's based on other criteria. So there isn't any reason people have to, again, capitalize on this opportunity, especially if they document it correctly, that it can potentially be forgiven and be transformed into an actual grant, right? So am I correct in that when we talk about eligibility requirements, I'm testing and just want you to confirm that what I'm saying is correct, that you is not based on credit score in any form or fashion.
No, it's not based on credit score at all, because in terms of the personal guarantee aspect of it, it doesn't require it for PPP. However, I do want to know that you should be in good standing in terms of, um, um, yeah, you should be in good standing overall in terms of not ever defaulting government and things of that nature. Even though student loans The recent rules state that if you defaulted on student loans, it doesn't count. There are other federal loans out there that may count against you if you've defaulted against it. So it's important to always remain in good standing, even when credit is not involved. So if you have like a FHA loan or something of that sort that you're defaulting on, it may affect you. I didn't see any guidance regarding FHA. I think in terms of student loans, it's very clear cut that the new rule doesn't affect you, or you won't be affected if you've defaulted on student loans or had issues with student loans. So it's important to always remain in good standing, especially when you're seeking financing, because anything can happen at any moment. Any new grants and new loan programs can happen at any moment. Even EIDL, I know EIDL, they pull credit for EIDL because it's a loan program. So if you want to be able to access that low interest rate and longer term capital that's super affordable, you always want to be in good standing with both credit as well as just other obligations that you may have.
Mm-hmm. But we know that, in our community, oftentimes credit, good credit, as it relates to credit score, is an impediment. And that's even more so now because of the tough times that businesses have experienced during these unprecedented times. So we need to stress to our guests the fact that you have an opportunity to get a loan that is not based on your credit score being one of the key criteria. It's not the only criteria usually, but it's one of the key criteria. And that is not the case for this particular loan. And again, if you document it correctly, you have an opportunity for it to be transformed into a grant. So folks, hurry, run now.
Yeah, definitely run. PPP is out there. There's no reason why anyone should, if you're a business owner, there's no reason why you should not apply for PPP. If you're a business owner and you file Schedule C, this is the time. If you don't have Schedule C, I think I've come across some business owners who didn't have a Schedule C because they just didn't know how to file it historically. And there's still time for you to go to your accountant and reconcile that and file 2020 tax returns if needed to access the funding before March 31st.
Mm-hmm. And I think that's the part that we want to get out. There's still time, but don't delay because the accountant also has other clients. And this is busy season. And folks like you that are expert in a loan officer, you're able to guide everyone and help them. Hey, namesake, this is my girlfriend, Stacey Clark, the maximizer. Thank you for joining in. And Sherry said, how much for a consultation working on business credit? It looks like you might have a client here.
There is no consultation fee.
There is none. This is what I do as part of my job, and our organization is really committed to serving small businesses and letting them know what's needed to be able to access the different funding options that are out there. Because in addition to PPP, we also offer other loan programs that's low capital that small businesses can tap into.
And I just want to say this. And that is one that, in spite of the fact that Kathy is working in her office in the four walls for 7 days a week, every time I call her and ask her to do something like this, she does not hesitate. This is like the fourth time that Kathy has taken the time to speak to business owners about financing as it relates to PPP and other loan products. So she's committed. As she said, this is what she does. And she definitely, no pun intended, she puts her money where her mouth is, so to speak. So,
thank you for that.
Yeah. So I just want to say that this is not about her business. This is what she does. And she's definitely committed to the cause and getting the word out there. So, we appreciate that tremendously. And you did talk about not only PPP, but the National Development Corporation. They offer other loan products that potentially may be a better fit for some businesses. We know that one of our guests, she said she just got the PPP loan, right? And so in a situation like that, if she needed to get additional funding, it may be more of a fit for her to get another type of loan or something.
Mhm.
So can you share with us about the other loan products that you offer?
Yeah, currently we are one of the lenders offering the New York Forward Loan Program. So the New York Forward Loan Program was implemented by New York State to help businesses in New York who may need more money outside of PPP or EIDL. So this is a loan program. It's a 3% interest rate loan program. With the first year, you only have to pay interest only the first year, and then it's amortized over the rest of the 5 years. That program is really affordable capital with a maximum loan amount of 100,000. So the way New York Forward works is you can't have more than 150,000 in the IDL, and you can't have more than 500,000 in PPP. So if you don't have 500,000 in PPP, 150,000 in the IDL, and your business has some cash flow to it, you may qualify for New York Forward. And it's usually funded within a week of application if you qualify. We do pull credit for it because it is a loan program. However, it is an affordable loan program compared to any predatory lenders that are out there. It's only 3% interest rate. Whereas if you're looking for quick capital elsewhere, you may run into a predatory lending scape of like 30%, 27% interest rate that can really suck up your business and prevent it from growing. In addition to that, we also have a grant program with Nassau County that um, we are facilitating on behalf of Nassau County. So we do have grant programs as well if your business is in one of those counties. And the New York Bar Recovery Program. New York State has a grant program for bars and restaurants that they can apply to as well through us. So we do have different funding for small businesses. In addition to New York Forward, all of the different grant programs, we also have traditional SBA loans. So a traditional SBA loan would be a 7A loan, and that loan is typically a 10-year loan with an interest rate between 5 and 7%. And that program is usually if you're looking to buy large equipment or if you're looking to buy a owner-occupied property to operate your business in. That can be structured through the 7A program. So there's different ways in terms of getting accessible loan capital through. And
Can I ask, and then I'm going to pivot to Stacy again, but because of the different loan products that you spoke about, for instance, the New York Forward loan, isn't there, you still have to, for that loan, especially because it utilizes traditional loan criteria, that they would have to serve as a first lien, have a first lien position?
we don't have to have a first lien position. It could be
Okay.
any lien position. But yeah, it could be any lien position.
Okay, just wanted to clarify. Can we explain that to our guests what that means for them in regards to, having a lien position, having a first lien position versus a second lien position, because that's very important that they understand what that means.
So lien positions typically in lending is to see who do you owe money to, essentially. It's the order of people you owe money to. So sometimes you may have an equipment loan where you bought an equipment and put a lien on that equipment. So that just means you can't sell that equipment until the lien has been cleared. Or every other person that's going to lend to you will see that, okay, this person has a lien on your business, either because you owe them money or you bought equipment from them that you haven't fully repaid. So it just helps lenders kind of get a better understanding of your business as well as kind of their interest in your business based on how much money you borrowed from them, or if you have an equipment loan out there somewhere. So I would say it's important for most business owners don't most lenders, they usually are fine with taking a second lead position in terms of depending on what that first lien is. And that's usually not a problem. I think another some lenders may say, oh, we strictly want to be a first lien position. That's very rare in some instances if it's for a small loan. For small loans, I think most lenders are fine with any lien position. They just want to make sure they have that lien on your business so that you can't sell the business, let's say, without paying off the loan. It will show up to your buyer that there's a lien that you owe money to someone.
And I thank you, Danielle, for elaborating on that. And also, I've been showing the different products that you have here with NDC. So, what is the difference if someone has a relationship with their bank? Should they talk to their bank or should they come see you?
It depends. I think in terms of PPP, if you're looking to work with a lender that's kind of there to help you along the way, NDC is the right place for you because most bigger traditional banks, they don't have time to explain to you why you don't qualify. They don't have time to explain to you what you can do better next time when you apply for a loan, like a SBA loan or a New York Forward Loan Program. They're just too inundated with a lot of different customers. And NDC, we are CDFI, so we are a smaller community development financial institution, and part of our job is to educate as well as to provide affordable capital. So it would never be like with any lender at NDC about, okay, why don't you qualify? Actually, all of our lenders will tell you exactly why you don't qualify if you don't qualify for our loan program. And that's that one step approach, and you will always have an idea of where your loan is at any given time. You won't just be left in the dark. So for PPP, it's up to you. You can apply with NDC, you can apply with the bank that you're banking with as well. It's just about the experience. For 7A loans, the same thing. For SBA 7A loans, it's just about that approach because we don't tick boxes when it comes to 7A lending. We want to understand the business owner. We want to understand your credit history. We're not so focused on the score. I mean, the score matters, but we want to be able to have that conversation with you about what can you do differently about your credit. What does your credit? Can we work with your credit? What happened that allowed your credit score to fall behind so much? What happened in 2019 or 2018 that you missed 2 payments on your mortgage? So we won't see that and run away. We'll see that and ask you questions about it and see if it's something that we can work around. I think that's the beauty of working with a small CDFI because we were really created to fill that gap between that traditional lending landscape.
And I think Stacy brings up an excellent point because what we find, Kathy, is that a lot of business owners, they tend to think that their bank is their first option as it relates to pursuing financing, where it's the opposite. Oftentimes, it's a community development finance institution like yours that they should be going to versus their bank. I had the opportunity to interview a business owner who was very profitable. He was doing business with one of the major banks, and he went there to ask them for a loan for a contract that he got, and they were like, "No, this is not the place." He ended up turning down the contract because he did not realize that he had other options for alternative lending, like an institution like yours. And so that is an education in and of itself for businesses to understand when they should be going to certain institutions and where they should be going to get access to capital.
Yeah, definitely. And that's very correct because in terms of access to capital, there's a capital continuum. Like I always say, there's different stages for different businesses. So banks have a role to fill in terms of a bank loan will always be cheaper than a CDFI loan in terms of interest rate, just because of banks. But because of that low interest rate, they also have more rules and more regulations that they have to meet along the way. So they're very specific about the type of industries they lend to, the type of business owners they lend to, how many years you have to have been in business, or the type of cash flow that they lend to. Whereas a CDFI, our mission is to create jobs and to help community and to support small businesses. So even if a loan that's we don't necessarily care about, I don't want to say we don't care about industry, but industry won't be part of the reason why you're declined for a loan. It will be other reasons. Whereas a traditional bank, they may have issues with a certain industry and say, we're not comfortable lending to this industry at this time. So they will decline a loan. And that's where we're there to fill that gap and provide an alternative and still affordable capital to small business owners so they don't fall into that um, predatory landscape of the really high interest loans that are out there that you pay back on a daily, weekly basis, which is never good for cash flow ever.
Mm-hmm. And the other thing is for minority women business enterprises that are looking to get contract opportunities and they want to use that contract for to access capital for working capital.
Mhm.
CDFIs also offer the flexibility that they have a loan product. It's called the contract financing loan product, whereas a bank wouldn't. And so therefore, with that contracting financing loan, you look at that actual contract as almost a form of collateral and things, and there's a more flexibility in that loan product. And that hence is the issue with the business owner that I referred to. He was looking to get a traditional loan from a bank, and they turned him down. Whereas if he knew about uh, your organization as a resource, as well as the different type of loan products, because there's a lot more flexibility in loan products, he could have successfully fulfilled on the contract as it relates to getting working capital.
Definitely. And that's why I think it's important for small businesses to understand that capital continuum I keep mentioning in terms of what is out there. Like there is bank financing, there is merchant cash advances, and there are CDFIs who really meet that gap between kind of like the super micro loans and loans up to, let's say, 5 million usually is what CDFIs cover, 5.5 million. And that's a huge gap. And that space is considered the small business landscape. Whereas most banks tend to focus more so on loans that are greater than that 5 million space. So it's important to figure out where you fit in as a small business, revenue wise, where you fit in as a small business, in terms of like how many employees do you have, and how much capital are you looking for at this time. So I think it comes with a lot of planning the capital strategy and reaching out and doing research on what are CDFIs, what CDFI is available around me, or what lender is available around me. So the beauty of NDC is that we lend across the country, and most CDFIs are regional, so we have the ability to lend across the country, where we have different loan programs launching in let's say Metro Atlanta and North Carolina, as well as Florida and Washington State and Texas, for instance. So we have the ability to lend across the country to this specific pockets and communities that are low, moderate income, with a specific focus on minority and women-owned businesses. So it's important to find out what fits you, what fits your business, and in terms of what institution is aligned with helping you grow your business as well, because that's where the business of growing businesses.
And that's the key. I mean, what you just explained, it's like our show, from the ground up. You want to understand the business owner. You want to give them real time issues and real time solutions, and not just another application coming through a very fast moving cycle, but really taking the time to find out what the best product is for that individual client. So I mean, you can't get better than that. I mean, there is no excuse. From the Ground Up has removed all excuses. We have brought you the information, and there is still time left to at least take advantage of this current PPP. But in addition to that, you have so many other products that can support businesses as they grow, scale, and develop. So this is exciting news for us. This is what we do, and why Danielle and I thought it was necessary for our company and our joint venture to come together to provide this kind of resource, because we're all living this in real time. 10, 20 years from now, when the history books are written, we want to be on the side of adding value and helping businesses survive when it's all said and done. So I invite everyone to go to your website, and we'll put it in the chat. It's ndconline.org. And that's what you're looking at here on the screen. And you're able to see about the various products. There is a very user-friendly site to just show you all of what is available for each of the businesses that might be listening to the show. And if they want to connect with you directly, should we just tell them to reach out to you on the contact page here?
Yeah, or my email is available as well. KTIAMIYU@ndconline.org. I think I'm on that. I should be on that contact page on the website too. But
Okay.
that's my email, and I can.
Kathy, I don't think so.
No,
I don't. I have to. I'm trying to go back in my memory bank when for you to be the panelist for the access to capital. I think I looked it up and I didn't see you there.
Oh, well,
yeah. So, yeah. So
okay.
You did share your email address, but if you can share it again, that would be appreciated.
Sure. So my email address is my last name, TIAMIYU@ndconline.org. And feel free to send me an email if you're thinking about accessing financing or getting PPP loan or New York Forward loan for your small business.
And Kathy, with that said, we have a guest, Diana, who it sounds like she already got the PPP. This is this particular PPP is the third round. So for business owners who may be who have obtained the first round and or the second round, and they can be in the forgiveness stage, what should they have in hand to ensure that their loan can be forgiven? I know we talked about the 940, the 941s to document potentially payroll, but if they use the capital for other items, how should they document that? What does that look like again for forgiveness?
Yeah, I would say bank statements is usually a good place to start, because bank statements would show everyone that you've paid from the business account. So it would show your rent. It would show let's say you're paying interest on a loan, utilities, that would show up on the bank statement. So have detailed record bank statements. Also, I would say it's always important to have an Excel file. Just keep track through Excel of how much are you paying yourself from the PPP loan on a monthly basis, rent that you're paying, utilities that you're paying, and so far and so forth, because that would really help you when it's time for forgiveness. And it's just another thing to keep track is a lot of the SBA says if you have less than 150 in PPP funding, you just need to fill out an application, but keep a detailed record of how you spent it. Because at any time they can look back and say, oh, this loan, there's something a little funky about it. How did this borrower spend it? And your lender may reach out to you for that information. So you want to make sure you're always ready, and either through Excel, bank statements. If you pay insurance for your small business, keep the insurance statements of pay, because those will count towards your forgiveness.
So Stacy, I was going to pivot over to you. I have one more question, but I was just wanted to balance if you had any questions for Kathy.
Go right ahead. I'm just making sure that we got the link out to everybody that's tuning in. and just making sure that you connect with Kathy, because this is the information that we need, and share it. If you watch this broadcast and it was beneficial to you, share it out on your page with your community, your followers, because somebody could get funded because of you. So wouldn't it be nice to be the giver of good news? So yes, Daniel, you go ahead with your question before we start wrapping up our show today.
So the last question, Kathy, is that we spoke about this with our other guests during the PPP, several months ago, but I think it bears coming full circle and addressing it again. And that is the difference between business credit and personal credit. So even though we're saying with the PPP, you may not be that may not require you having a minimum credit score. As a business owner, it is going to be, if not today, tomorrow, critically important that your credit score is in good standing. So can you share with business owners, the difference between business credit and personal credit? Because I think oftentimes they think if they have good business credit, the personal credit may not be, necessary. So if you can educate us on that and what that looks like.
I would say, from my experience, personal credit trumps business credit. Because I don't know many lenders. It takes a lot for your business for you to seek funding without your personal credit being pulled, especially after the 2008 crisis, right? Because a lot of times most business owners are intertwined with their business. Lending on just business credit alone doesn't always show the full picture, because business credit isn't perfect. It's nuanced. There's different things that go into it. They don't always have all the information needed to garner a perfect score, whereas personal credit shows everything. It shows all of your liabilities. It shows all of your late payments in different aspects. So I would say it's more important to have a solid, or focus on building a solid personal credit, because depending on the rate of your business, unless your business is like a Microsoft or Amazon, that's when Jeff Bezos is no longer getting his personal credit pulled to get a loan for the business, just because the business is really that big, and it can speak for itself essentially. But most small business owners don't have that privilege, because you're still building and you're still growing. So for you to get a loan, it's really based on your ability to pay it back and your ability to operate your business successfully. And most small business owners there's no way to remove you from your business. The business doesn't operate unless you run the business. So as a result, when it comes to time to get a loan, your personal guarantee is required. And as a result, your personal credit is required. So in terms of figuring out what to focus on and to make perfect, I would say focus on your personal credit first. You build business credit based on your ability to pay back your business obligations. So let's say you have a loan with your business. You paying that loan back eventually helps to build up your business credit. But when seeking funding, I don't know many lenders who at the small business stage will solely lend to you based on your business credit. It's rare. It may be somewhere out there, but not most small business lenders, or most lenders want to know the personal credit of the owners, because without you, there's no business as a small business.
Absolutely. Great point. And we thank you for sharing that. And it is a full circle, right? From season one, and talking about the different parts of credit and cash flow and all the things that businesses need in order to be successful. And the good news is, wherever you are, start with where you are and move in a new direction, and connect with people like you who do the work and saying, okay, what happened here? What happened there? Let's prepare for what's next. So maybe something might not be a current product that you can take advantage of, but looking into the future, rather, you can prepare yourself to be in a better position. And that's what the show is about. It's about giving you those real-time solutions for the real-time issues. So, Kathy Latu, we thank you for taking the time to be here today to share your expertise. This has been quite a lot for everyone to digest. I'm sure they'll be pressing the replay a couple of times to make sure that they didn't miss anything. But are there any final words that you would like to share before we turn it over to my co-host to close out today's show?
No, I want to say thank you for having me. And to a lot of small businesses out there, just make sure when it's time to apply that you're ready. That you want to make sure you're applying for PPP loans by March 31st. New York Forward is also available loan program that's out there if you're looking for additional capital outside of PPP and EIDL. And if you have any questions or concerns, connect with me on LinkedIn or shoot me an email, and we can always schedule a time to discuss further. Because in terms of small businesses, there's a lot of help out there, but at the same time, small business owners should also make sure that they're doing adequate research. So when you're going to a lender, you have an idea of what you're looking for, and you're not saying, okay, well, I want $1 million. Give me what you have, kind of thing. You want to make sure you have a plan, and so that the conversation can be more fruitful and beneficial to both you and your lender.
Absolutely. Over to you, Danielle. This has been a great show. I hate that it has to come to an end, but you have a lot of loans to process.
I sure do. I sure do.
and you know what? It's only coming to the end for today, but we will be back in 2 weeks. And Stacy and I thought it was critically important for you to get this information. So we kind of took a little pivot to provide you this information about PPP. But in 2 weeks, we should be speaking again about joint venturing and the power of collaboration. And so we hope that you join us. We are expecting to see you again in 2 weeks at the same time to get additional information and great information and practical information that you can apply to grow your business. So until then, make it happen, be productive, and we're looking forward to seeing you in 2 weeks.
Yes, for Sweet 16. It'll be March 16th. Hey, Danetta, she said this was amazing. So thank you all for tuning in. We appreciate you, Danetta, Sherry, Stacy, and everyone else that we did not catch. Diana, we appreciate you. Bye-bye, everyone. Stay blessed, stay safe, stay warm, and be safe.